You can make your first 10K as a day trader in 2025. We're about a month out, and if you follow the 5 crucial steps that I'm going to share in this video, it will increase the chances that you have to make your first 10K as a trader. These are the same 5 steps that I took to make my first 10K earlier on in my trading career. You want to stay to the end of the video, and you want to download the PDF in the description so that you can take full advantage of the 5 steps and prepare during the month of December. I've made over 10K a month as an engineer, over 10K a month as an entrepreneur, and over 10K or more monthly as a trader. One thing I want to recommend that made it a lot easier for me to hit my goals, and that is to follow something called the 10X rule. With the 10X rule is you'll take your goal and you'll multiply it by 10. What this does, it causes you to become more creative. It causes you to reach higher. It causes you to act with more urgency. This may give you the energy and the strength that you need day by day, because this goal often is more exciting. I want to challenge you to ask yourself, how can you make your first 100K in 2025? The 5 steps here I learned from pros, and the first one is data. If you have one setup and the stats are the average win rate is 65% with about a 1 to 2 risk to reward, this is a profitable setup. And let's say this setup starts to generate you $20 a day. In order for you to go to $200 a day, $2,000 a day, it's a matter of scaling. The problem is when you first start off, we are in a hurry to make money and we don't understand that you need edge above everything else. You need an advantage that will help you consistently win in the market or have what is called positive expected value. So before you do anything else, if you're preparing to trade in 2025, if you have patterns, if you have confluences, and you've never gathered data, you don't have the stats on those, then you are gambling, unless they came from someone that already had the stats. So quick analogy, and then I'll show you how to gather the data. Let's say there's a poker table and you walk up to this table to play. If you never played poker or if you won't play poker, I'm using this as an analogy because it's almost a synonymous example. So you go to the poker table and someone has given you a list of things to do, or you roughly study what should be done online. The person that's going to beat the game here is the person whose strategy, whose approach has been studied. They have data on the approach. They have data on the different types of hands. They have data on the different types of scenarios, and they know how to play the scenarios properly. They know how to play the hands properly. That's the person that is going to win. You can show up to the table and you can win from luck, but this doesn't mean that you'll consistently be able to show up and win. So if you want to make 10K, but you want to do it in a way where you consistently take money from the market, the first step that you should take is to consult the data. Now, how can we do that? The first thing we should do is have solid stats for at least one of our setups. Let's say you take one setup and you have very strong stats for that one setup, and you can confidently say, when these certain things line up, my outcome over 20, 30, 40, 50, 60 trades will be such and such, will be a certain number. So here are 3 ways that you can gather data. Number 1 is you can use a site that gives you reports. So I'm going to show you a site called Edgeful. And Edgeful will generate reports to show you how often something happens. So you can use pre-built reports to help you design your setups or your strategy. Number 2, you can do manual scans. So I'm going to show you how you can use a historical scanner to pull charts and scenarios, and then you can look at those charts manually. And the third option will be you can use code and an API to grab a bunch of tickers for you and run an analysis on them. So generally the first 2 will work for most people because they can't code. I'll show you a brief example of number 3, and then we'll move on to the next step that you need to take. All right, now this is a site called Edgeful, and it generates reports that are helpful when designing your strategy or testing certain scenarios. So for example, I'm gonna look at the futures market. I'm gonna look at price action type of report, and you can choose different types of reports. This report is the power hour breakout. Looking at NQ, we're looking at the New York session. And the power hour breakout report, when you're within the power hour at 3 Eastern to 4 Eastern, it'll show you if a new high of day is made between those hours, or if a new low of day is made between those hours. So if you take a look here, it shows you that 77% of the time, a new high of day is not made. So we're not looking at 77 out of 10 times a new breakout will not occur during the power hour. Likewise, 83% of the last year, 83% of the time, a new low of day will not be created. So if you are holding on to profits, or if you're trading the intraday trend and you are looking at new highs within this hour, it's likely that it's best to go ahead and take profits or secure yourself in a certain way. This is a piece of data that will help you with a certain scenario and will help assist your strategy. If you want a discount on Edgeful, click the link in the description to take advantage of different types of reports. Let's move to the manual historical scanner. So you should see trade ideas on my screen. I use trade ideas to scan the market every day, post-market scans, pre-market, intraday scans. And also it has a key feature, which is historical scans. So what I can do here is I can look at the top gappers from any particular time frame. So I go to historical date, and let's say I want to find a gap, the top gapper on October 15th in the pre-market. So I click OK here, and then it's going to give me a list that I can then filter through, and I can look for certain criteria: amount of volume that was traded, how much it gapped up. So this BNZI gapped up 45%, Wolf gapped up 31%. So we can see the symbol, the gap percentage, the volume traded per share, and then the amount of float, amount of shares. You can use a third-party software like TradingView or another to look at the charts. So you can come to TradingView, whip up Wolf here, and then you can go to October 15th. You can study that day, or here we can go look at the chart, look at October 15th, and we'll see what price action is there, if our strategy setups are there. Here's the 15th, here's the 16th, it's rising. This is an easy way to find out if your scanning criteria is good, also to find your setups, also to backtest certain scanning criteria, and look at the top gainers, top gappers, or other criteria that you may have that you want to put into a scanner that you can look at historically. This is a great option here. Now, the third option is more advanced. It takes some coding knowledge. And there are many sites that you can use to do something like this, but an example here would be to grab files, okay? To grab data on different stocks. So we can do something like this. Let's say we grab data for 2024. Then we filter that down to the top 30% gainers by date. And then we can filter this down even more based on certain criteria about the stocks. Let's say based on float, based on pre-market volume, traded. So pretty much what we saw in the trade ideas historical scan, we can go a level deeper where we don't have to go day by day. We just fetch all of 2024's data. Then we fetch all of those that were up 30% at a certain time. From there, we can go and look at the manual charts and do a deeper dive. If you want to go further, there are automated strategies that you can use. There are automated ways to code your strategy, but that takes a lot more. So I won't mention that because that takes another skill set. I will do a video on basic coding skills for those that want to do more advanced backtesting. Let's jump over to number 2. All right, number 2 is execution. Now, let's say I have a strategy that has edge. Let's say my win rate is 68%, 1 to 2.5 R&R. That's a winning strategy. But I need to become really good at trading the strategy so that I can avoid hesitation, FOMO, greed, late entries, exits, etc. So I have this data set. Now, how can I train my mind? If you listen to professional athletes like Kobe Bryant or LeBron James or Michael Jordan, they talk about how they would watch hours of film and shoot hundreds of shots in practice. If you show up to the live market and forward test your strategy, you can do this. You can help train your mind to see the confluences and to see the patterns, the geometry of the charts. But how can we speed that up? I don't need to show up to the market for 10 years in order for me to digest 10 years worth of data. And this is where a program like Trading Sim comes in. So here, this is a program called Trading Sim. And we're gonna take our example of Wolf. So we're gonna go to Wolf, and we're going to go to October 16th. Now this was all done on the fly. I did not plan this particular date, okay, when I did the back testing. So this is October 16th, 2024. And what I'll have here is the pre-market, and this is the 15th where we had that big spike. It was on the top gainers. And for whatever the news headline was, maybe we decided to trade it on the next day. So I have the 15 2-minute here, and we can literally replay the session as many times as we like to. So what I have over here is I have here the level 2. I have the tape as well. So if you're working on price action, finding your setups, working on reading the tape, the level 2, you can spend hours on the weekend when the market is closed, getting your reps in by using a program like this. If we hit play, we'll start to see the market open as if we are in the live market. So it's November now. If you were to sit down, go and gather your data, practice your execution in December, and prepare yourself for January, you will be more formidable as a trader if you get started now. Download the PDF in the description and share this with someone else. Now let's jump into number 3. Let's talk about risk. We have to have a risk plan that will help us in the beginning, let's say January, when we're still getting used to our strategy that we back tested. We want to work on having a few things. One is a scaling strategy, and 2 is our stop limits. The scaling strategy will allow you to start with 1 share or a small amount of risk as you start to forward test. And then slowly you scale up the strategy, let's say, so every 2 weeks, if you can, you bump up your risk by 0.5. That's one thing. Another thing is the stop limits. So we want to have a monthly stop, weekly stop, daily stop. And what this will do is, if you hit your daily stop, the next day you'll come back and cut it by 50%. This will help you preserve your capital if you hit some rough patches along the way. So the scaling strategy, when you're going green and you're having a hot streak, is what will propel you and help you get to that 10K mark. The stop limits, when you have a few bad days or even a bad week, this will help you stop the bleeding so that you won't blow your account. Now, number 4, psychology or the mindset. There's a book by Tom Hogard. 3 concepts I want to discuss. One is mentioned in the book called The Best Loser Wins. In The Best Loser Wins, he talks about how you should have hope when you're winning and fear when you're losing. Basically, this is cut the losers, let your winners run. Over time, as you start to trade this strategy, you have data on it. You can expand the strategy by looking at holding for having higher R&R, or in the beginning, you can cut a lot earlier just to get green. Number 2 is thinking about the series. So the data that we documented, let's say 68%, average R&R is 1 to 2.5. So you know that if you take 50 trades, you're going to win about 34 trades out of 50. So that means that you are going to take 16 losses. So what's the outcome of 50 trades, 68% with a 1 to 2.5 R&R? We're looking at 34 times 250, which would be about 8,500. This is me risking $100 per trade, and 16 losses times $100, which will give me about negative 1,600. And then the net of that will be $6,900. So over 50 trades, 68% win rate, risking $100 per trade, then I can make $6,900. With this data set, how much do I need in order to make 10K per month? If I risk $100 per trade, I need around 73 trades to make 10K. And I'm considering these to be scalps. She's showing up to the market and you're taking these trades. If you're risking $150 per trade, then you'd be looking at about 48 trades. If you're risking $200 per trade, you're looking at about $36 per trade. So looking at these numbers, you can hit your 10K target with that data set by just showing up every day, taking 73 trades, taking 73 trades, or as you become more comfortable and you apply the scaling strategy, you only need 48 trades or so. Or if you can risk 200 per trade, then you're looking at taking 36 trades. So if we break this down into by trading days, we're looking at, for this one, to take about 2 trades per day. And these numbers can be altered in any way, right? But this is all just an example. So let's talk about the last thing that you need. And I'm sure you're saying, how much money do I need in order to be able to risk $100 per trade, $150 per trade? The very last thing is capital. Let's talk about how much money you would need in order to make 10K. We're going to look at a few different scenarios together and how long it may take you to make your first 10K in 2025, depending on your edge, your strategy, and also depending on how much capital you have. Let's look at the math to see how long it will take you to make 10K from 2 scenarios, but with 5 different account sizes. I don't recommend trying to make 10K in one trade as a beginner, because if you haven't even made 1K in one trade, or 500 in one trade, or 250 in one trade, because trading psychologically, when it comes to sizing, in order for you to make 10K in one trade, in most scenarios, you have to put significantly more risk. So let's say you even risk 2,000 to make 10,000, which is possible. It's a more rare scenario, but you have to be able to see yourself in negative 2,000 drawdown. And most novice traders aren't ready for that. So the pathway I'm going to present will help you gradually build that first 10K and cross that first 10K as a milestone, rather than making 10K in one day or just in 1 week. Now, let's say the goal is to earn 10K in 6 months. That's 126 trading days, not including the weekends. Now, you may say, 126 days to make 10K? I'm talking to the person that has never made 10K. So we'll look at it from 2 ways. One will be if we targeted 10K in 126 trading days, and you have to adjust for losses here at different account sizes. The other will be if we generated 2% per day, how much will we make in 126 trading days? Evaluating these 2 scenarios will help you see how you can design a risk plan that will allow you to hit your 10K goal. Also, it'll show you the power of compounding and account sizes. Many people underestimate, especially if they have a job, they underestimate the skill. If you build the skill and you have a job and you have a track record that you build, you can then take that track record to yourself. You can take that track record to your spouse, and you all can design a plan on having more money, putting more money into an account. You can take that track record to your parents potentially and say, hey, if you want to fund my business or help me expand my business, this is what I've been able to do. This is what I've been able to do with a small amount of money. I have a consistent system. I'm pretty much green for the majority amount of time. I'm green. Can you make an investment in my trading business? Okay, so let's do a 1K, 5K, 10K, 15K, and 25K account size. So the percentages here, if we incorporate compounding, we're looking at about 2% per day, 0.75% per day, 0.5%, 0.4%, 0.25%. So you can see that with a small amount of money, it takes you have to gain more. So that's something that you want to be aware of when you're selecting your account size or the amount of money that you're going to start with once you've built a track record, which we'll talk about later. Now, let's look at scenario 2, but from a different perspective. Let's pretend that we made 2% per day on each of these account sizes. Now, as you see, I've showed you from one perspective, you're contained if you're just targeting 10%. Okay. Now, so let's look at with compounding all of the different account sizes. So here you're looking at about 12K profits, about 60K in profits. At 10K, you're looking at about 100K in profits. At 15, you're looking at about 180K. And at 25K, you're looking at about 300K in profits. Now, you may say these aren't the returns of hedge funds, and you are correct about that. At day trading firms, they laugh at the returns of hedge funds because when you can day trade in and out and you're trading what's in play, that money that you have should be, if you have the skill, the money should be working, should be generating money for you almost every day. You'll be generating money week to week, even though you'll have losing days, sometimes losing weeks, sometimes losing months. But day trading and scalping is a lot different than looking at how a hedge fund or these larger institutions trade. I hope you enjoyed this video on how to make your first 10K in 2025. We are about a month out from 2025, so go ahead, download the PDF in the description so that you can get prepared. Preparation is key. Do that homework, gather that data, and come back to this video and comment below your questions, and I'll spend time making more videos to answer your questions. Please like and subscribe. If you want to see a video on how to build long-term edge and a playbook, watch this video.